You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. If you haven't done so already, check out our latest edition, Options Oddities. You can find it anywhere you find this fine program, including over there at the mothership, theoptionsinsider.com, from whence all of this great content, this great river of options content flows. You can find it all there, all of the network episodes of pretty much every program we have, all 13, I believe now, or even more. It's hard. I lose track, even listeners, believe it or not. You can find them all there. Of course, you can find them iTunes, Stitcher, Aha Mobile, pretty much wherever you find your finer podcast programs, including, yes, indeed, our mobile app available for iOS, Android, and the Fire OS. Instantly stream anything you want to hear on the network whenever you want to, wherever you have a signal. You can do it. You can download them if you're not going to be around a signal tower anytime soon. Download them. Put them on your phone for later. We don't mind that. And, of course, while you're doing that, you say, hey, I have a question about this. I have a comment about that. Let us know. Hit that comment tab right there. It's really easy in the iOS. A little bit, I think, more convoluted in the Android version, but it's still there. And, of course, for the Fire OS version as well, you can shoot us a Facebook question, a tweet, an email, even leave us a voicemail. It's all baked right into the app. It's really cool stuff. Check it out, the Options Insider Radio Network mobile app, available for pretty much whichever platform you're rocking. We got a version for you. Now, speaking of rocking, we're going to rock and roll on the old panel today, starting off with the man beaming in from the great principality known as Maine, a.k.a. Lobster Mecca. None other than the Rock Lobster himself, Mr. Andrew Giovinazzi, from a little place called OptionPit.com, by way of this here Options Insider Radio Network, and indeed moonlighting as our unusual activity editor extraordinaire. You wear many hats, sir. You're a very busy fellow. Glad you can make it on the old program today.
I was taking my cue from Alex.
Yes, he is a man of many hats.
How he flips those hats around in his head. It's like that part of, what was it, the Polar Express, you know, when they're slinging that hot cocoa all over that train. You got to move fast in this business. You got to move really fast.
You do indeed. And speaking of Alex, I have heard from him since we last spoke, and he said he's doing well, and I think he's down about 35 pounds since his surgery. So serious business going on over there. I guess he said he's feeling a lot better, so that's a good thing. I know he's been wanting to have that surgery for a while, but the Schwab folks keeping him off the old show, said he can't get back till I think late October is the date. They say you're on disability, you can't do anything, can't even beam in at home to the old Option Block program. So he wants to, listeners, but he is being verboten forbidden by the old Schwab legal from doing so. But don't worry, we'll get him back next month, or pretty soon, actually, almost this month at this point. And Mr. Tusaw rounding out our panelists here, of course, good old Uncle Mike from RCM Wealth Advisors. Uncle Mike, welcome back to this here program.
Oh, always great to be here. And I, too, miss Alex very much and looking forward to having him back and missing hearing about the hats.
Yes. And if you did miss the live show, listeners, we do have some photos, I believe, out there on Twitter. You can follow us as well, twitter.com/options. You can see some photos of Alex in a very jaunty cap. Hey, he wore it just for you guys to make the live show, just to make it fun. So, we're looking forward to having him back, and we're also looking forward to kicking off this fun show. A lot of fun stuff to talk about. So let's get going and dive right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block. Like the man said, this is the portion of the show where we break it down. We break down everything that's going on in the world of options and indeed in the broader financial markets. And been quite a roller coaster ride in the old market since the last time we here gathered together on the old program. Of course, last Thursday was a very, very rocking day. Markets selling off very aggressively, over 1% in most of the major indices. And then, of course, surprise, surprise, we rallied back quite a bit on Friday. Today, Monday, September 29th, most of you listening to this probably on Tuesday or beyond, the 30th or beyond. Not as active of a day as Thursday and Friday. Most of the major indices either off fractionally or pretty much unched on the day. Yet that didn't stop good old VIX Cash from catching a bit of a bit, up about a little over a handle, nudging close to that 16 handle again, 15.89 as we're recording this today, listeners. A lot of stuff to get to, a lot of stuff swirling in the marketplace. But before we do that, let's open it up with each of my cohorts here on the old All-Star panel. Uncle Mike, I think we'll start with you today. What caught your eye in today's swirling maelstrom of activity?
I think in general, the SPY caught my eye, or the market as a whole. The main thing that caught my eye is that even though S&P finished down, I believe it was about 5 handles I'm showing, if you look at a daily chart from the actual open of the market, in the first 3 minutes, the market was down, but then after that, the market went up significantly throughout the day. We actually were up from the low of the actual trading day I'm just looking at SPY right now at 196.11, and then of course we closed at 197.54. So we actually had 15 points of upside. Now, for those of you that were following the overnight markets and the futures, a lot of what had happened with Hong Kong, with the protesters, I think played an obvious big part in what the market is doing today. So during the day, it seemed like the cash traders were bullish, but overnight, those who were doing the futures were what were bringing the market down. So I think there's a lot going on right now. I think we're at quite the precipice in terms of with the global risk through Hong Kong. Combine that with the non-farm payrolls coming out this week. This is going to be an exciting week. And as always, I'm excited.
You are always excited, even on the unch days, Uncle Mike. You can always count on you for a wee bit of excitement, a wee bit of optimism, even as the S&P pulls ever farther away from those record highs. Who knows? We can retrace them again. You never know. You never know. I'm sure you're leaning very much in that camp as we speak. Maybe getting away from some of the diehard bullish optimism towards more of the entrenched cynicism and fundamentalism that is none other than the Rock Lobster himself. Mr. G, what caught your eye in today's activity, sir?
It was actually that one of it was a little bit of a topic today in Option Pit, just mostly on how the vol futures are reacting and all the products. There was a little bit of a bid in the midterm options in the volatility futures. And, it felt like they kind of moved, the futures moved a little more than the cash did, at least, or the future products moved a little too much relative. Things snapped back a little bit toward the end of the day as we rallied. But, it almost looks like they were ready to just let the futures fly up a little bit. As I'm looking here on the close, we did close in a slight contango again. We were backward for at least a part of the morning and for a good part of the day until backward, meaning, the VIX cash price was more expensive than the front month future price, at least. So that usually is an expectation where the vol future traders are thinking that the cash volatility won't be able to maintain, essentially the volatility in the S&P 500 options. So as the day wore on, basically the vol futures kind of hung high, and we got a little bit of a sell-off in the cash. So, the futures didn't trade close on their highs of the day, but they closed at, near their highs. So you're not seeing you're not seeing a bigger pullback in them. So they're kind of hanging out at that level, sort of waiting for something to happen. And that's generally, the future traders are pretty smart. If they're going to leave a bid for the futures, there's generally a reason. There's some event or something. And Mike alluded to non-farm payrolls on Friday. You got the ADP numbers. Maybe PIMCO having to dump a bunch of bonds is freaking everybody out because they're getting some redemptions, trying to get ahead of it. I don't know. But there was certainly there's enough individual, like Bill Gross leaving, that would have been, one thing. And then Hong Kong, that would have been another. But when we have kind of all these things stacked together against, this, you still have the somewhat Russian shenanigans, the emerging markets getting powdered, considering where they were to where they are now, like those interest rate worries creeping back in again. It's like there's lots of stuff that actually, when you think about it, don't really make a hill of beans a difference to the U.S. economy. The fact that we have to raise rates is good, but I think mostly because there's real demand again. So you have kind of these peripheral worry issues, which push up stuff like volatility futures. But as Mike said, that the cash buyers, people buying stock, sort of slowly came back in. So, we'll see what happens. But it feels like the market's a little thinner, so it's whipping around a little more for sure. And I think volatility is at least just fairly priced kind of up here, at least until we get a number out this week. So it's just a little whippier market, but the buyers still seem to want to buy stocks.
Yeah, and of course there are some other fun things to watch in today's market. I'm happy to say we finally have some option stats here for Baba. Good old Alibaba going live today from an options perspective, of course, about a week or so after the old IPO. And I think a lot of people were surprised by what they saw today. I know we were talking on the last episode, a listener wrote in saying, hey, what do you guys expect for the Baba IPO? And most of us pretty much followed the traditional trajectory of the puts are going to get bid up because it's hard to borrow, et cetera, et cetera. And you had mentioned on the last show that actually the cost to borrow had started coming down even well in advance of the options launch. And it looks like today we saw some relatively, I hate to say it fair, but pretty close to fair pricing here from an implied vol and overall perspective here in Baba. Total volume today about 122,000 contracts. So fairly robust. I'll leave it up to you guys to decide if that's a surprise or a disappointment, depending on what your own expectations of today's volume were. I think a lot of people were expecting a very, very robust day. It certainly was a decent day by most metrics. And what else was surprising about the paper, that usually on a day like this, you see a preponderance of paper going one direction or the other. We really didn't see that at all today in Alibaba. 122,000 contracts, like I said, 64,000 of those, almost 65, coming in the calls, and about 57 to puts. So about 1.1 to 1 calls over puts, which is very surprising. Usually it's put heavy. We didn't see that today, and it's pretty darn equal here from an overall call to put. Even the net deltas are relatively flat on the day. So there wasn't a one trend we saw out here today. It was pretty much paper across the board, which is in and of itself very interesting and very surprising for a name like Baba that had a lot of people watching. Looking at the strikes, and of course this thing was active on pretty much every strike known to man. Calls all the way up to the 130 strike in November, down to the 60 and even 45 strike in November as well. So people were playing the full range. Anywhere they can get some premium or sell some premium, they were doing it. Jan 2015, 45s, a 25 lot of those puts went up today. Everywhere, pretty much every strike is just painted with some green here today. So interesting stuff going on here. Mr. Rock Lobster, I know you guys watch this in your myriad chat rooms with your myriad mentees and clients. We were talking last episode about how the cost of carry had come in. Seems like it came in even more going into the launch today. Did any of your clients, were they interested in this? Were there any trades going up here? Or was it more pretty much mostly watching and waiting because things really weren't as out of whack as a lot of people expected?
Yeah, we priced, like a 10-point wide butterfly, like 190.80 October fly in here, thinking that, let's say if the volatility holds, actually we priced it because we wanted to maybe do a Yahoo Alibaba arb, buy some Yahoo and sell some Alibaba into the earnings. And the vol came right in. So like the pattern we saw last week of the borrow coming off Alibaba started to filter into the options almost from the open. I mean, they opened the options in the low 40s, and the implied volatility came in. So, a 3-lot 190.80 put butterfly was up about $40 a contract, or $40 per fly by the end of the day from the beginning of the day. Because I think Baba after the opening only moved about 25 cents, and all the at the money stuff just sort of caved in. So we looked. It's a little early for us to kind of jump in anything. I like the idea of some sort of arb, but there wasn't enough to get us super excited in it. But 100,000 contracts that's nothing to sneeze at. I mean, that's a top 20 issue, on the first day. So that's pretty big.
Indeed, there shall be no sneezing here on the old program. We're not allergic to such volume here on the option block program, sir. Let's parsing some of the more sizable trades going up in Baba today. Nothing too outrageous, no 10,000 or 20,000 lots, most in the 3,000 range and below. We see 3,000 of the Nove. Looks like the Nove, first I thought it was the Nove 85, 95 put spread went up 3,000 times. But now I'm looking at it, they both went up essentially right on the bid. So could have been a put stupid going up 3,000 times here. The Nove 85, 95 put stupid, which is kind of interesting. Also saw 2,500 of the Dees 95 calls going up that way as well. So it could have been perhaps some sort of weird a broken wing fly this guy was trying to do on some weird ratio, because he also did, like I said, some other, actually that was Dees. So all kinds of weird paper going up here today, quite frankly, listeners, as I'm parsing it live here on the old program. Most of them, though, seem to be well south of the 3,000 lot range. Actually, most of the big trades were in the 1,500 and 1,000 lot range. The Nove 97 halves going up 1,500 times. A lot of 1,500 lots going up today for whatever the reason out there in Baba. Like we said, in a nutshell, no real one-directional paper, no bias to the paper. Calls and puts pretty much going up essentially identically, which is very, very odd for a new issue like this. So we'll certainly keep an eye on this. I'm certain this is not the last time we're going to talk about Baba options on the old program, but it's kind of nice to finally have that option stats portion of the ticker starting to fill in there. It's been so lonely just watching the underlying stats and not having the old options to file suit. Speaking of filing things in the options world, ISC has filed. If you're playing the home game, if you're betting the over-under on more exchanges or fewer exchanges, always bet the more. History has a lot of inertia behind you if you're betting the more. Bet the over, not the under, because we saw yet another exchange getting filed for approval today. This, of course, our friends over there at ISC. They recently launched Gemini, which was their second exchange a year or so ago, and now they're already filing plans to launch Mercury. I guess they're going into the Greek god realm for whatever reason for their new exchanges. This is going to be the third exchange license they're going to launch. And when I say exchange, listeners, I really kind of use that term very dubiously. This is not what you may think of in the old days of, hey, you're going to build a SIBO, we're going to have a floor, people are going to come down there. It's a very unique place with unique paper going up. These are essentially different models being utilized by the same company. So here is going to be maker taker, here's going to be price time priority. They haven't really said what this third one's going to be, some hybrid of the two, I would imagine, but they're really going after different pricing models as opposed to creating an entirely new venue to create liquidity. So really, when you see exchange getting bandied about in the options world today, and indeed in the stock and financial realm, it mostly means, hey, we need some wiggle room to exploit a new business model or a new pricing model, and this is what we're going to use to do it. It's kind of absurd. I think most people would agree. I think even the exchanges would agree. But until the SEC relaxes some of those restrictions that says, hey, you can't charge different prices for the same asset on the same exchange, essentially, they have to do things like this, which are essentially very convoluted ways to charge essentially three different prices for the same thing, if it's Apple options or whatever the case may be, because they have different pricing models, different incentives, maker, taker, taker, maker. It gets all kinds of crazy. But that's essentially what we're seeing here. Uncle Mike, Mr. Rock Lobster, you guys, I'm guessing you're not very surprised that an exchange would add yet another name to the ongoing cacophony that is the options exchange space.
I was just thinking the other day how we needed another exchange.
You couldn't get all your stuff done on the dozen or so that we have now. A new one would really just add that extra little bit you needed.
Yeah, I think that if regulation is the cause of this, then it's going to get fixed at some point. But like you said, in the meantime, let's have another exchange.
Yeah, it's kind of hard to really get enthusiastic about this because it really is, for a lot of listeners of this show, they're already complaining about things like fragmentation starting to impact them in the way they execute sizable spreads across multiple exchanges, multiple trading venues. It's already starting to impact them. You're seeing a spread maybe offered away, but not on the exchange where your spread is actually being housed in their spread book. And of course, the spread books don't talk to each other, et cetera, et cetera. So this kind of thing can cause a lot of problems for listeners of a show like this. Hopefully, eventually we'll get this stuff worked out and we won't have the need for every exchange under the sun to have myriad sub-exchanges, essentially, or sub-entities that they have to file for, which is kind of interesting stuff. We'll pay attention to that. And also pay attention, of course, to Baba as the show continues, and I'm sure we'll be back with a lot of listener questions and a lot of feedback about that in upcoming shows. Meanwhile, it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block, the portion of the show where we break down the interesting paper that we're seeing going up on the old options market and at the old optionsinsider.com today. Going to kick things off as we are wont to do often here on the old Odd Block in the biotech realm. Going to kick things off with Tetraphase Pharmaceuticals, Inc., ticker symbol TTPH. Yes, listeners, another newcomer in the biotech realm. There's no shortage of weird, cheapy, inflated, implied vol biotechs for us to talk about here on the old program. This one actually trading at a bit of a premium to most of the $2 and $3 names we usually talk about. This one trading a penny shy of $20, up about 14 cents on the old day today. This is the name, as you might expect, doing about 196 contracts a day, so not even 200 contracts a day, but lighting it up today to the tune of 2,400 and some change here today. And what caught our eye out here in good old TTPH was a pretty sizable chunk of relatively deep OCC calls going up. Looks like a closer, and looks like this guy probably not too happy with the way things turned out. In particular, this morning on the site, we profiled the OCC 12 halves going up. Well, when we profiled them, looks like about 750 or so going up of these OCC 12 halves for prices around $7.40. Yes, I said $7.40. These are indeed a $7 and change in the money call. So that should give you some indication that something either went very right or very wrong with this trade. Open interest, surprise, surprise, is 751 contracts. So clearly this is closing paper. It went up in a couple of chunks this morning throughout the day. And again, looks like this is closing paper. Looks like on the surface of it, this could be a closing buy, someone coming in to take off a buy right that went very wrong. This guy clearly, probably in retrospect, not too enthused to be dumping a bunch of stock around the 12 half handle with the stock trading right around 20 right now. So this perhaps showing the downside of aggressive buy writing out here in some of these cheapy biotechs that are perhaps known for making some aggressive moves, including $7 and change through the strike that you just wrote. Mr. Rock Lobster, what's your take here on this guy? Looks like essentially getting blown through here on TTPH.
Yes, I think the guy was pretty happy, guy or girl, never know. In just the middle of August, the name was trading below $12. So the right probably looked like a good idea, and I guess they waited till now to buy him back.
What could go wrong writing it here? You know, what's the problem? Let's do it all day.
Well, the thing though, because they're buying the calls back, I assume they're selling the stock out at some point, because there's nothing worse than keeping the taking the realized loss, but not any of the that's a pretty large unrealized gain in case Tetraphase decides to become uniphase and go back to wherever it came from.
Oh, that would be very painful indeed, getting hit both ways.
Yes, I don't think that's not from the Alex or Mike Tusa buy right playbook. So then I saw a bunch of the Nove 22s go up, like a 200 lot. So, I mean, clearly they like to write calls in this thing. There's still, the volatility is around 85 or so. So there's a lot of juice in it to sell, but the underlying is moving all over the place, moving straight up actually. And I'm just looking for news on this name, but it's a pretty big move. So anyway, I thought at the beginning up, somebody was, made size on this. And, any buy right, if you just kept the stock and unwound the call, if it closes above the strike, you made money. They probably made $1 or $2 instead of, $8, but it still has worked out for them.
Yes, they did indeed make money. Of course, the human psyche doesn't work that way. When you see I made 50 cents or 80 cents and I could have made $7, $8, that's what's going to linger in their brain, not the fact that they made the 50 or 80 cents.
It is bummer city,
yes.
For sure.
And certainly, yeah, you're right. You mentioned the 22 halves. Also about 500, the Nove 17 halves going up today. Maybe some sort of vertical there. Nove 17 half, 22 half, off 1,400 open interest on those Nove 17 halves. So it could be that guy also had positions out there in Nove. Maybe he's adjusting some of those higher as well. A lot of paper at work out here in TTPH. Yeah, you're right. Hopefully, we didn't see a lot of stock going up with this. Hopefully, this guy took the stock off the table, too, and isn't just saying, hey, I'm going to go write some 22 halves and hope that's going to save me, because it's not. if this guy
right, because they could be rolling the 17 ups to the 22 halves. Certainly very possible. So it's, I don't know. I think it might have been a couple different customers, but quite a lot going on in tetraphase pharmaceuticals today.
Yeah, that's interesting stuff. We'll file that one in the to be watched category as well. Meanwhile, we'll keep on rolling into our next name. When we're not talking bios, we also like to talk chips and semi makers out here on the old odd block. And today we're talking Magna Chip Semiconductor Corp, ticker symbol MX, closing today $11.76 off about 14 cents. Or here over 1% on the day. This is the name that does about 100 contracts and some change, doing nearly 1,800 today. So fairly robust volume, and pretty much all of that coming way out on the longer end of the expiration spectrum, out in March to be precise. These were the March 15s. When we profiled them this morning, only a few hundred had gone up in one block. As the day progressed, a lot more piled in to the tune of nearly 1,400 going up on this strike. Prices, looks like they were around 60 cents. Looks like most of this paper was actually buying a lift in the offer in many cases here on these calls for around 60 cents. They're 50 at 65 going out here. This is on open interest of 4,000 contracts and some change. This is clearly one of the most sizable. This is the most sizable strike here from an open interest perspective out here. So clearly there's some paper on this strike. This could be this guy piling in, or it could be this guy trying to cover what he wrote. Again, this would be weird for someone perhaps covering a March buy right, because you're writing the March 15 strike. You got some time for that trade to work in your favor. You don't really need to take it off now, but maybe he decided he doesn't want to wait another 5+ months for that 50 odd cents or 60 odd cents to come in. He wants to take it now and do another trade. That's certainly very viable. If so, he's got another 2,700 or so contracts to take off. So keep an eye for more paper here on this strike. Mr. Rock Lobster, where do you fall on this? This guy, you think piling in, or you think he maybe is indeed giving up the ghost many, many months shy?
See, this is where listening to the show the day after is going to help, because I think if you just look at the open interest tomorrow, you'll get an answer for this one. I think because, there's a little bump in volatility, that this is new paper, buying up calls and trying to take it up a little bit. There's 4,000 calls. I don't see why you would close one of these. Of course, now we just had the example of TTPH where I want to close my short call
maybe you
early.
do want to close them early. What do we know?
Yeah, I know. What do we know? I'd at least wait till it's $15 or something when it's, give it time to work a little bit. At least they'd have $3 out of this one if it went through $3 plus the premium. So But I think somebody's kind of piling in. What is this? I think this might be the only semiconductor that's not near its year highs. So I think a little upside spec in this. Again, I'll check the open interest to see if it's not a short cover, but that would surprise me if it was. Just a big chunk of volume for a stock that doesn't do very much. So.
Yes, listeners, you guys get the benefit of hindsight when you're listening to this program. You can tune in and say, aha, they were fools. It was indeed closing, or it was indeed opening. So make sure you play the home game and surf on over to these strikes and these names that we're profiling and you guys can see exactly what went up because you'll see the open interest changes, and you can let us know what you think about that on upcoming shows with the mail block. And many of you actually do, which is always quite fun. All right, moving on to our final name here in the old odd block. Good ticker name. This is TAP. Of course, this is Molson Coors Brewing Company, closing today $74.22, up about 15 cents on the old day, or about quarter of a percentage point or so. And this is the name that does decent volume, about 3,700 contracts a day. They're a name you've actually heard of, so that tends to help here on the old odd block. Doing over 7,000 today, 7,121 to be precise. Heavy on the calls, 4.2 to 1 calls over puts. That should give you some indication of what we were watching out here today. What caught our eye was some action on the old Nove 77 half strike. In particular, when we profiled it this morning, one mega block of 1,500 of these calls went up for $2.20. Looked like it was a buy right, so we'll pay attention to this one and see. Again, open interest negligible, only 166 contracts, so that's clearly some opening paper out here. We also saw some decent paper out here in OCC to the tune of the OCC 75s going up 3,636 times on open interest of nearly 18,000 contracts. So that's clearly the winning strike from an open interest perspective. Looks like somebody perhaps could be taking some of those contracts off and then readjusting out to Nove. If so, he's doing it on a ratio because he's only doing it about, 2 to 1 here, or what should I say, 1 to 2 really, on this roll. If he is adjusting, and if that's the case, then keep an eye out for a lot more paper to come behind to the tune of many, many thousands of contracts if this guy is indeed going to roll all of this paper. Mr. Rock Lobster, take us home here. What's your take here on this plethora of call paper going up out here in TAP?
So there's like a couple of funky things. One is there was a pretty good size. It was like 137,000 shares of stock that went up about the same time as all this. So I'm thinking that could be a buy right for the Noves if it was 1-to-1, because it's about 137,000 shares over 1,500 contracts. So that's roughly a buy right, slight overwrite, but kind of a buy right. And then the 3,000 OCC going that rolled. So my thinking was it's somebody that owns some stock when TAP had that takeover rumors trading, at a higher price. They dumped a ton of the OCC 75 calls onto the market. And, the stock has since pulled back quite a bit, about $3, and the vols come in a little bit, at least 6 points. So they got a big compression there. And now they're rolling up to the Noves somehow. So somehow I think it's all connected. Maybe they had to trade a little stock to sort of rebalance how much they own. But I feel like they're connected, even though they didn't go up marked spread. But they both went up tied to stock at the exact same time. So it's kind of like if it walks like a duck and quacks like a duck, it feels like this customer is just, they're just rolling part of this spread, and they probably have a bunch more to go. That's what it feels like.
If it walks like a duck and it quacks like a duck, then yes, they are indeed slinging Baba options. So yes, this looks like it has all the standard hallmarks of a guy adjusting and rolling. Nice to see the blocks of stock going up in some relatively appropriate numbers and not some weird ratio. You have to kind of use, some really weird guesstimate logic to see if it's tied or not. Also not surprising to hear that the spread tags are failing us once again. The conditional tags there, the trade tags, pretty useless, as I've said many times here on the old show in the past. All right, that's going to do it for the old odd block. And now, because the Viceroy is on a much deserved hiatus, we're going to keep on rolling right on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, you know what that sound means. It's time once again for Uncle Mike to come on down from the top of the mountain, stone tablets, smoking jacket, and bubble pipe in hand to dispense some options wit and or wisdom, his call, sometimes both, sometimes one. It depends on the week, I think, listeners, to what you're actually going to get. And my birdies, my minions, I use them interchangeably these days, Uncle Mike, and they're starting to whisper in my ear something about a topic that is pretty popular on this show. We've touched on in the past, and a lot of people have written in with questions about, and that is indeed how to really go about, if you have a 401k or one of these retirement type accounts, how do you really hedge it when you're so limited with what you can do from an options perspective in a lot of these accounts, if you can even use options in them, because most of them have prohibitions that you can't. So, Uncle Mike, take it away, sir. The floor/mountaintop is yours.
I like how you call it prohibition. I've never heard that term before, but man, you're one for the cause, Mark. I truly admire you.
That's why I get paid for my words, sir.
It is impressive.
I make them very big, and hence I get paid more.
I should start thinking about doing something like that. I'm trying to, but all I can come up with are one-syllable words. Well, anyway, let's say that you're in a 401k right now, which a lot of our listeners probably are in one way, shape, or form, because a lot of Americans are in one way, shape, or form. And right now, you are concerned about a few things. You're concerned with the news that's going on in Hong Kong. You're concerned with non-farm payrolls coming out on Friday. You're concerned with the Fed possibly raising interest rates. You have lots of concerns on lots of things with which you have the human natural right to be concerned with. So what can you do as a way with which to hedge such concerns? Well, I think that what makes sense for a lot of people, now every account with which I personally have, for my wife, myself, and my children, you have the ability with which to do options in. There's no restriction, with the exception of my checking account, but I'm talking with them about allowing options in the checking account. So maybe write some calls on that money so we can get some interest going. Just kidding. So with that being said, let me give you an example of something that I'm doing for some of my clients right now that might make sense for you. Let's say that you have a 401k, and let's just assume that you put 100% of your money into an S&P index fund. Now, once again, I don't recommend that by any means, but let's just say that that's what it's in. I'm just trying to illustrate a point here, and then I'll go into a couple of other points shortly. 100% of the money is in the S&P index fund, and let's just assume that it's about $20,000, just for sake of easy math. Well, right now, SPY is trading at $197.34, so 100 shares of SPY is worth $1,973.40 approximately. Or I'm sorry, $19,734 approximately. So forgive me for the bad math. It's been a long day. So with that, if you want to hedge that, and there are no option opportunities within your 401k, one thing that's popping up in a lot more 401ks now are inverse funds, but I would recommend staying away from those. What I am doing for clients in similar situations like that, if they're stuck in something, is I'm buying puts on SPY. So with the $20,000 example with which I used, approximately, you can buy one put on SPY. Right now, the current put with which I am in for clients is the February 199 put. That's the put that we've been in for about a month now. And within that put option, we did buy premium at the money about a month ago. The volatility levels were just too low. I could not resist. I rolled up from a 190 put to a 199 put when the time frame ran out. So with that, we have pretty much total protection. We're in the money a little bit, which I'm fine being in the money a little bit because I'm kind of concerned about this market right now. Now, you might ask, well, but Mike, that's fine. We have this put option. So if the market goes to zero, we're in great shape. I feel comfortable. We're doing a great thing. However, the problem is it's that ugly thing called time decay. How, Mike, can we possibly hedge against the time decay? Well, one thing that I like to do week in and week out is I like to sell put spreads. usually. Right now, though, I'm kind of concerned about the marketplace, and so I want to have less deltas on the table. Reason being is that if we do come higher, volatility will go lower, and it will help me with the next position with which I am about to mention. The way with which I'm currently financing the 199 puts for the clients that are long an S&P index fund, let's say, and other accounts, is we are short the October week 199-201 call spread. So with that, let's assume that SPY stays below 199 between now and this Friday at the close. Then all of that premium will expire worthless. And by doing that, we are just chipping away bit by bit at the financing cost of that 199 put. Now, like I said, typically I'm not one to want to cap upside, but right now in this market environment, the reason with which I feel comfortable doing it is because let's say that we do get a 20-point or a 15 to a 20-point increase to the 199 level by Friday. If that's the case, it's my belief that volatility will come down a little bit. And I've been in this position for a few days now, so we have been able to, it's about break even right now, even though the market has risen since the position was initiated. The position it's actually 2 pennies down, so I guess it's not quite break even, but the market has risen, so we've had a little bit of time decay work in our favor, and should the market go up, we'll have volatility working in our favor, most likely, not guaranteed by any means, but most likely. So at that stage, I'll be able to roll up the call spread or take it off for a smaller loss, something along those lines. So if you are in a situation where the only thing with which you can have exposure to some type of an investment in a 401k is that, this is something with which to consider. Now, you'll have to get another account, possibly another IRA, possibly a non-qualified account, whatever makes the most sense for your individual situation. This will take additional money to do so, but if we do the market has a royal crash in some way, shape, or form, this is a way with which you can protect yourself. Now, the same would hold true with bonds. Let's say for some reason you have money in a bond fund and you're not necessarily concerned with the credit risk of the bonds. Maybe it's a U.S. Treasury bond fund, or maybe it is something with very high credit ratings. So credit ratings really aren't your concern. It's just rising interest rates are your concern. Well, if interest rates rise, then bond values go down, obviously. So you can set up something similar on a TLT or something along those lines. And of course, you'll have to make sure that you have an understanding of how the fund moves in relation to TLT or whatever you're looking to use. But nonetheless, you have the ability to do that. You have to set up some type of a hedge account in one way, shape, or form, but it's not a hard thing to do. Options Express and Charles Schwab are places with which you can do something like that. So with that in mind, hopefully that helped, and that is one to grow on for today. Last time for the month of September.
Very celebratory times here. One more for the month of September. Good stuff, as always, Uncle Mike. Like I said, a topic a lot of people are very interested in. And it's unfortunate that we have this bifurcated system where people have to go through such lengths to hedge this account. There really should be more, stipulations and opportunities and options, pun intended, for these people to keep it in the same account, so it's a little bit less of a headache for them. Because when they have to open up the other account and manage it, and they're watching this one dwindle while this one grows, it's a weird psychological and logistical hurdle for them to overcome. So maybe someday down the road we'll make it easier for people to do that. But these days, at least, that's one way you could do it, listeners. Meanwhile, we're going to keep on rolling right on into our final segment. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're watching, what we're keeping an eye on for the rest of the week, as Uncle Mike and Andrew and everybody else, including myself, alluded to here at the top of the show. A lot of stuff to watch this week, including what's going on out there in Hong Kong, a bit of a volatile situation out there. We all know the macro events tend to play and wreak some havoc on the domestic markets here, so we'll pay attention to that. A lot of numbers coming out later this week as well, so a lot to pay attention to until the next time we all gather here together around the old Option Block All-Star panel. Uncle Mike, I think we'll start with you. What are you really paying attention to for the rest of this week until the next time we all can gather together here?
Besides just the numbers themselves, like I say frequently on the show, definitely watching those. But I think Hong Kong, it has the potential to be a very big event for all the major markets. Will it be? Who knows? But non-farm payrolls are coming up, so definitely watching that. But my concern this week, or the main thing with which I'm watching, is the events going on in Hong Kong. Because this one seems like it's one thing if you say, oh, there's trouble going on in the Middle East. Well, what else is new? And there's the Fed may raise rates. Oh, they may not raise rates. What's new? This thing in Hong Kong kind of has my attention because I think this has the potential to be some news that can actually have some real effects on the markets as a whole.
And Mr. Rock Lobster, what's catching your eye for the rest of this week, sir?
Well, you know what? It's not Tiananmen Square this time, with China. I mean, it's a different, I don't disagree with Mike. I think that's what was rocking a lot of the other emerging markets. I mean, definitely there's the Fed and there's interest rates and things like that. But, if they just go in with the tanks this time, that's going to scare a lot of people. It's going to scare a lot of people with a lot of money in Hong Kong, too.
Yeah, they don't want to mess around with such hard end tactics in Hong Kong, of all places.
But you never know, right? So the big problem with where I think, I wrote a blog today is, do I think the vols should come in after non-farm payrolls? Sure. But maybe hedging iron condors with VIX butterflies or something for little tiny dollars might not be too bad of an idea right now, just in case. Because you do have some of these potential outlier problems. So sure, you want to make some premium dollars, but maybe you don't make as much this time because this could be a factor. And mostly I just don't like the way the futures react, and when I don't like the way they react, even though I think vols should come in a little bit at some point in the near future, I change kind of the way I look to hedge something like that. So, I think we've had a little bit of a turnaround since last week with the way volatility is trading. And I just can't chalk it right up to, interest rates and non-farm payroll. So there's something out there. And, China, Brazil's down, several percentage points or something. So those are all pretty big moves. I mean, they're not small parts of the globe anymore. So something out there is bugging everybody. And I think non-farms is part of it, because the fact that maybe the path to raising interest rates might become more clear. We're kind of having that issue in the fourth quarter of 2013. Maybe it's starting to inch its way back in, but I don't think there are too many people that don't think rates are going to go up in 2015. I mean, the Fed has done a pretty good job of telegraphing that. So, those are more known changes that are on their way. So, I can't disagree with Mike here. The Hong Kong thing is a little weird because, the market can handle like one-offs. Yeah, the Ukraine thing, it bugs people, but it only gave us kind of a little rise. The ISIS type stuff, like these isolated events, you get a little sell-off. But once you start putting a couple things together, you get a couple markets falling apart, that's when, the pullbacks can be a little bit stronger and a little steeper. So, and that actually, is when you start rolling tanks in and things like that, if they do something like that with the demonstrators, instead of doing what democracies do in general and kind of coming up with different ways to change policy, it's definitely wild cardy. It could be a big nothing. Maybe everybody just goes back to reading their paper and enjoying the great life they have in Hong Kong. But the wealthier China becomes, and obviously Hong Kong is already a wealthy place, the more people are going to be demanding more democratic stuff. And it's just a question of when that happens. At some point, I'm sure the rubber will meet the road. But the way stocks are so already iffy up here at the 2,000 level, and I think that's where we find ourselves. There's really no reasons short term for us to rally again until we start seeing some more quarterly earnings reports, as far as headline catalysts. But, the bears always sound smart, and there's a million reasons for us to tank. So at least for right now, the market for volatility is saying that it's expecting some more near-term movement. So,
Yeah, and certainly you're right. A lot of people have been waiting for some sort of conflict to emerge in Hong Kong since the takeover in '97. I think a lot of people are amazed it's taken this long. Those two very disparate type of cultures coming together. It was bound to cause some friction, and perhaps we're seeing that play out now. Perhaps it's just an isolated incident. No one really knows for sure. I know someone who's planning to travel to Hong Kong, I believe, next week. So perhaps he's planning or to amend or change those plans. One other thing I wanted to mention, this is something away from the core markets, but something we're also watching over here at Options Insider. It's going to play out over a much longer time horizon, though, so not something we need to dive into right away. I just want to mention it because it did come out today, of course. A lot of people, and we on this show have talked quite a bit about a lot of the myriad errors we've seen causing a lot of issues in the technology space, and particularly on the options space in recent years. That's a relatively new development. Options have been pretty much insulated from a lot of the big equity errors we've seen on the tech side of trade throughs and things like that. And of course, in recent years, and a lot of you have written into the show about asking questions like, hey, what should I do to protect myself against these? Are these a problem I should be concerned about? We just saw today that OCC, which is the Options Clearing Corp, they announced that they're in partnership with the exchanges, are enacting a lot of provisions that should hopefully address a lot of those, including kill switches, things they probably should have had in place for a long time. Kill switches, price reasonability checks. So when some of these rogue algos like Knights and others start blasting out options at ridiculous prices, the clearing corporation will also have some kill switches and some protections in place there to stop that stuff from happening. And also a few other things like activity-based protection. So if risk gets beyond a certain threshold at a certain time limit, they can cut things down and things like that. Drill through protections, a lot of things that probably should have been in place before, but now will be enacted. The reason I say this is coming is because this is all pending regulatory approval. And I think even here in the release, even though it was announced today, they're talking about not implementing the fees that are going to pay for this until June 30th of 2016. So listeners, we got almost 2 years to wait if it indeed is approved and all other things go to pass. So if you know anything about options, that's a relatively par for the course time frame. I just wanted to mention it now because it is making a lot of news and a lot of headlines today. It's something that we'll watch and certainly talk about again as the show progresses. But unfortunately, that's all the time we have for Around the Block. It's also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. All right, starting off with you, Uncle Mike Tusaw. What's cooking in the land of RCM Wealth Advisors?
At RCM, what we're doing right now is still welcoming in new clients. So if you are the person who has approximately $500 per month to invest and you'd like to work with an option person, so to speak, feel free to give me a call personally at 312-212-3531 or send me an email at mtusaw@rcmam.com. Would love to have a conversation with you and discuss how we can do things in the markets at these levels.
And that's RCM AM, so don't email him in the afternoon or evening, listeners. Only in the AM will he be able to receive those messages.
That's right.
I'm sure you don't get that joke ever over there.
No, it stands for asset management.
Yes, indeed. All right. Thank you for the clarification, sir. I'm sure your compliance would have insisted upon that anyway. And Mr. Rock Lobster was cooking in the land of the pit, where compliance be damned.
Yes, that is not an option pit issue currently because we just do edumacation. But we have a webinar for the VIX and the vol ETNs on October 4th as a follow-up to, I don't think we've ever had anybody at a webinar, so many people at a webinar of ours than we did last week on our September 24th webinar. It was crazy. So a lot of those people will be migrating over to round 2 to get some more education at optionpit.com/events. For just understanding how these vol products work. And, there's no time like now to figure out how they work. Now is a good time. At the very least, for the huge fee of $47, you will think to yourself, you know what? Maybe these vol products are not for me and I'm never going to touch them. And that $47 might save you thousands or tens of thousands. Because most of the people we have come across, or many of them early on, have just not understood how the vol products move and they've done things that just with some education they wouldn't have done. So if you have any interest in this space at all, definitely worth popping in the webinar, listening to Mark Sebastian and myself, and seeing how these products work.
There you go, listeners. The first taste is always free over there at Option Pit. Then they get you, but also they give you some good stuff too. So it's worth the trade-off in many respects. All right, and
one would hope.
Yes, one would hope indeed. All right, and of course, the Viceroy couldn't join us, but if you'd like to learn more about all the stuff we're talking about, including all the cool tools he talks about on this show on a regular basis, Idea Hub, we talk about the trading patterns guessing game, all that cool stuff can be found over there at optionsexpress.com. And the best part, a lot of the live events and education that he's always talking about here on the show, you can get those pre-login. Don't even have to be a client. Just surf on over to ox.com, or I should say optionsexpress.com, and hit that education tab. You can see it all right there, pre-login. It's really awesome that they make that stuff freely available to all of you. And if you're a client thinking about becoming one, surf on over there, log in, and play around with all these cool tools that we're always talking about, like the trading patterns and indeed the Idea Hub. Is pretty cool stuff. Optionsexpress.com to learn more for yourself. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for making it such a fun show to do every week. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.